Buenos días, buenas tardes, y buenas noches a todos. Welcome back. Glad you're here, because you could have been on YouTube watching anything. You could have been watching why America needs tougher gun laws.
This is why mom doesn't love you.
Or you could have been watching some internet gold.
Why don't you go and then?
You go. How can you slap? How can you slap?
Mad or what?
How can she slap? How can she slap me?
How can you slap?
How can she slap me?
How did you enter? I'll up it right now. You
Anyway, you're right back here with me, and I'm grateful. You know, gratitude is always my only attitude. I've got a stock which I think should be in everyone's portfolio, and if not this exact stock, a stock similar to it. One of those dividend pillars that everyone should have to help balance out your portfolio. You know, we can't always be chasing these crazy growth stocks with huge returns, but also come with high risk. This is a very low risk stock that's just going to bubble nicely in the background and do you proud in the long run. So let's roll the credits and get on with it. Right, the stock I want to share with you today is none other than Pepsi, stock ticker PEP. It closed on the weekend at $158.35. They do pay a dividend. They're one of my favorite dividend players. They have a dividend yield of 2.71%, which they're about to go ex-dividend pretty soon, so you still got time to get in on that. They have a market cap of 218 plus billion, so they're in the mega market cap range. They have a PE ratio of 26.74. It's a tad bit high, but let's have a look here. They did have a trailing PE of 26.74, so they have improved on that, and a forward PE of 23.67, which that's more what I'd expect or hoping for. So they are aiming to be more profitable next year, which is always a good thing. They are a quarterly dividend payer, so 4 times a year you'll get a nice little payout from them. And they closed on Friday. They did have a bit of a down day, but you know, any other time, look, 5 days, 1 month, 6 months, year to date, a year, 5 years, they do nothing but go up. They are a, you know, dividend value play. I don't really want to call them a growth stock as such, but you know, they're well on path to beat the S&P 500 this year, and an excellent dividend player. So a nice place to put a bit of money in my eyes. Right, we all know Pepsi. No need for me to go into a big deep dive about it. There's no way you've made it to adult life and you don't know who Pepsi are. But anyway, at PepsiCo, we aim to give our consumers choices. Our full range of food and beverages are designed to bring a smile to anyone's face, anytime, anywhere. They're available in over 200 countries and territories and tailored to meet the tastes and preferences of our local consumers. If you didn't know, Pepsi make more than just the drink that we all know. They're also behind all these brands here. Some of them I do consume and eat. And what I do like about PepsiCo rather than Coca-Cola, they're both fantastic stocks for the same reasons, but Pepsi do food as well, where Coke just do beverages. Anyway, as you can see, they've got Pepsi, their main thing, and Lay's crisps, Mountain Dew, Doritos, Gatorade, Tropicana. Well, we'll get back onto Tropicana in a bit. Quaker Oats, Lipton iced tea, Starbucks coffee, but Starbucks are their own entity, but I believe they do the bottling for them or something like that. I'll double check that. Don't want to be spreading false news. Cheetos, Mountain Dew, what my daughter loves, Miranda, oh, I love a Miranda. Strawberry one. This orange one's disgusting, but yeah, the strawberry one's banging. Lay's, in the UK, we know them as Walkers. I've actually just finished a pack. But yes, Lay's did buy out Walkers. I know this article here is on Wikipedia, which you should always take with a pinch of salt, but I have checked and this is correct. Walkers was acquired by Lay's owner Frito-Lay, a division of PepsiCo. They did keep the name Walkers for brand recognition, but yeah, everywhere but the UK, you will see Walkers down as Lay's. Don't know why they didn't change the name. If you're old like me, you'll remember that Snickers was Marathon back in the day, and that changed to Snickers, and I don't think that harmed them. I still ate it. But yeah, back to Tropicana. Still showing on here. Pepsi have actually sold Tropicana, but they've kept a big stake in it. I guess that's why it's still on the website. As you can see here, PepsiCo announced it will sell Tropicana, Naked, and other select juice brands to private equity firm Pi Partners. The company will net $3.3 billion in after-tax proceeds from the deal and also retain a 39% stake in the newly formed joint venture. What I was happy to see was PepsiCo already had a good idea on how it will use the proceeds from the transaction. It plans to use a chunk of it for debt reduction amongst other corporate initiatives. I was glad to see they're looking to bring down debt rather than just pump it straight into another brand. I was in Macy's stock a while ago, and when Macy decided to close some of its stores, it actually sent the stock price up. Since they was bringing down their debt. So even though they've sold off some brands, I wouldn't be surprised if that pushes the stock further, since, you know, Tropicana did prove to be dead wood. They were trying to get away from that and the Naked brand. All right, let's have a brief look at these numbers. You can see that 73.27% of all shares from Pepsi are held by institutions, meaning that retail investors like you and me aren't greatly going to move the share price too much. The top institutional holders are Vanguard, BlackRock, and State Street Corporation. And the top mutual fund holders is Vanguard Total Stock Market Index Fund, followed by the Vanguard 500 Index Fund and Invesco's QQQ. Right, an important thing to remember about PepsiCo is that they are a dividend aristocrat. I believe they have 48 or, yeah, coming up 49 years of increasing their dividend continuously. So with that, they are dividend aristocrats, because to be a dividend aristocrat, you have to have continuously raised your dividends for 25 years. If you do it for over 50 years, you become a dividend king, which they're on the verge of becoming. So congratulations to them. So you've got to always think, during these last 50 years, there's been wars on, you know, different sides of the world. We've had virus outbreaks now and all kind of political nonsense. And with all of that, they've managed to not just maintain their dividend, but raise it continuously. So that shows you the strength of the company. And you can see that here. I've just got 5 years worth of dividends. So you can see it's done nothing but increase up to current date. So with Pepsi being Pepsi, there's no reason they can't carry this on for another 50 years. So being a dividend aristocrat and nearly king is a big part of their appeal. Having a brief look here on their income statement, you can see the total revenue has been going up each year from 63, 64, 67, 70s, trailing 12 months, 74. Their total assets, 2017 did dip between then to 18, but from then onwards, they've been going up. Their total liabilities has been fluctuating, but we should see that drop now they've palmed off Tropicana and Naked brands. The amount of free cash that they've got available has been increasing. Even the trailing 12 months, we're only in August now, and that's already surpassed 2020s. So, yeah, I'm not sure if that is including the sale of the two businesses, but yeah, they're going to have a lot of money to hand. Looking here, 7 analysts say that the stock is a buy, 7 say it's a hold, and none say it's a sell. They have given a lowest price target of $154, an average of $165, and the highest price target of $185. Me personally, though, I'm not in here for the growth of the share price. I'm actually here just to collect the dividend every quarter, but we all have different goals. So yeah, I know for some it'll be nice to get that share price appreciation. Right, tip score have given Pepsi a smart score of 10, which is the best it can get, meaning they have the best chance of outperforming the S&P 500. The analyst consensus is that Pepsi is a moderate buy. The investor sentiment is very positive. Bloggers' opinion is bullish, along with the news. The hedge fund activity has increased by 2.2 million shares last quarter, and the technicals are very positive. The asset growth at the moment is 3.19% for the trailing 12 months, and the return on equity at the moment stands at 59.07%. Right, that's about it for this one. Like I said before, PepsiCo, it is not a stock that's going to make you crazy rich. You know, if you're after that, you need to be chasing those growth stocks and trying to get in early, trying to find the next Tesla or Amazon. This isn't it, but it's a good place to put your money. Know that it's safe. You're going to get a nice dividend, and it is outperforming the S&P at the moment, so that is a good thing, especially in this crazy market. But yeah, it's a nice place to keep your money. You're going to get a little bit of share growth, appreciation, along with a healthy dividend. So that's why I feel every portfolio needs a few stocks like Pepsi in there, where you don't have to stress. You're not going to wake up next week and the share price has dropped 50% like it will with, you know, some volatile stocks. It's just a nice one bubbling in the background to keep your money. Right, a bit of good news. One of my good friends has just started his own channel, talking about cryptos and whatnot. And yeah, top guy, please give him a follow. The channel name is Invest with Roni. I'm going to try and put a link up there. If I can't do that, it'll be in the description below. But yeah, Invest with Roni. My friend, he does crazy analysis and research before he even tells me about a particular crypto. And yeah, he hasn't let me down. I believe in having like one trusted voice when it comes to certain things, because it doesn't matter what you put in. I'm sure if you've looked at crypto yourself, you could put in Bitcoin and Ethereum, you'll have people telling you to buy it, people telling you to stay away from it. So you just end up with too much voices and not really knowing what you're doing, where I listen to my friend because I know basically the amount of analysis he puts in. If I start looking at it, I'm not going to find half as much stuff as he does. And I know they always say, always do your due diligence. I preach that myself. But admittedly, he's told me to buy some cryptos. I've bought them. I've made good returns on them. I just wish I'd bought more. And he's my trusted voice. So allow him to be your trusted voice. Invest with Roni, top guy. And for making it this far, thank you again. Gratitude is the only attitude. Please like the video, subscribe and hit the notification bell, and share this video with people who you know may have an interest in the stock market as a whole. Right, if you're still here with me, I haven't bored you to sleep. I know it's not the most exciting of stocks, but these are some fundamental ones we need to have in our portfolios. Can't be all these fancy super high growth stocks. You know, some of them are going to moon and then some of them are going to crash and burn. So you always need to have that balance in your portfolio. So if you're not going with PepsiCo, make sure you find, you know, another steady one, whether it's Coke, whether it's Procter and Gamble, Unilever, whoever. Just I suggest looking in a Dividend King section or Dividend Aristocrat, find a list and find some good companies there who've had continuous years of raising dividends and also a nice bit of share price appreciation. So yeah, you know, thanks again. Gratitude's the only attitude. I will see you soon. So take care of yourselves, people. And yeah, adios.